U.S. President Donald Trump increasing the pressure on Europe to try and take control of Greenland, facing the consequences, was hinted by claiming that NATO owes it to the U.S. to grant it full rights to the Arctic territory. Let's get a market reaction from Theresa Shutt, Chief Investment Officer at Harbourfront Wealth Management. Theresa, thanks as always for joining us. Did you get a chance to watch the speech?
I did. It was interesting. As always, it covers a lot of topics.
Very diplomatic. Very diplomatic.
He doubled down on his demand for control of Greenland. Did indicate, of course, that he wouldn't use force, and then took the opportunity to launch a fair bit of criticism of Europe and obviously tout his own agenda. So I think what you're seeing in the markets obviously is a bit of a bounce back from the softness we saw yesterday. Clearly, is this kind of a taco? We're not sure yet, but it's certainly consistent with his bargaining or kind of negotiating tactics, where he starts with these really extreme offers or positions to anchor the conversation and really put his opposition on their back heels. So, is he responding to, what he thought, might become more market volatility, like after Liberation Day or not? We're not really sure, but I mean, certainly the market's taken it as a positive sign. But, we're not out of the woods. Markets could return to trade war mode. That means more volatility and, of course, the potential for higher inflation.
Well, he didn't really mention tariffs at all. So we don't know where his mind is with that. And is there a danger in that if the markets just start assuming that everything is a taco? Is there a danger to that?
I think it is. It's like the boy that cried wolf. And I think we saw that, a little bit yesterday where, typically this type of, action, or kind of rhetoric would be considered, 20 years ago as something quite significant and something quite market moving. And I think, investors or traders are a little afraid to go too heavy into the down trade. In case it kind of hurts them, and obviously it comes back as we've seen. So I think we just have to accept that this is part of his tactic. It's a way to kind of create urgency, perhaps that's not there. Again, to I think not necessarily weaken his opposition's position, but certainly put them again on the back foot. And it seems to work. So I think that's sort of being built in now to the investor mindset when we receive these kind of sweeping announcements.
And with the sell-off yesterday and then the buyback today, buying the dip today, is there any one particular area, or is it fairly broad-based?
I think what's interesting, and obviously market broadening is hopefully becoming a theme going forward. I think this was just a general kind of buy, I think, or kind of positive bullish mentality because the news was obviously somewhat reassuring. But I think going forward, take this noise out of it. If you look at the market generally, the Mag 7 is frankly becoming the Fab 4 or maybe the Terrific 2. Only Alphabet and NVIDIA really outperformed the S&P 500 in 2025. And, Mag 7 stocks are doing worse than the broader benchmarks already this year. The only thing they have in common is, frankly, that they're trillion-dollar companies. So, going forward through 2026, we can expect more winners, more losers. I think there's still some fatigue amongst investors about, is this a bubble? And I think people are starting to very, very intelligently look at other opportunities outside of AI, and particularly those industries that will benefit. So, financials, I think, are very attractive in terms of efficiencies that could be improved with AI. Healthcare, logistics, obviously, are there. And I think we're going to see some of the AI players come under a bit of pressure as they're starting to have to price in maybe some of these tariffs. Amazon just announced yesterday that they're going to have to start increasing prices, and that's going to weigh on profitability. But that said, I mean, these upstream and downstream opportunities from AI are still very attractive. So if that means less kind of narrow leadership, that's great. But that's a longer term, I think, outlook for 2026. I think right now the markets really have to focus on what happens at Davos, where we land with tariffs, because I don't think those are off the table. If Trump doesn't get what he wants, and it's somewhat unclear, I think, why he wants this so bad. There might be other motives. And if Denmark can kind of, talk him off the cliff or de-escalate the situation, then maybe tariffs are off the table. But it's too quick to say. And so I think, investors still should be cautious.
And we still, of course, we've last few weeks we've been talking about hearing from the Supreme Court on their ruling on tariffs, and they keep. I don't know if they're holding. I don't know if maybe they haven't finalized their decision, or if they're holding off, waiting for that perfect moment, whatever that may be. But what kind of an impact could that have when it does come out?
I think that is actually a very interesting development. You're right; they keep pushing it off, and that will have obviously significant implications. Now, are there opportunities to appeal that and kind of drag it through the courts? Maybe, I don't know. I'm not a legal expert, but I still think that right now we just have to accept that tariffs are in place. And we can see that Canada is clearly adjusting to that. The recent deal, the landmark deal that they made with China, the recent partnership with Qatar, even Europe, they're the largest trade bloc in the world. Obviously they depend on U.S. for their exports, but they've been sourcing other trade corridors and adjusting their supply management. So I think yes, that could influence things, but my view is tariffs are here to stay. The U.S. government has become highly dependent on the revenues, and I think the world has started to adjust. So I find with new tariff adjustments, they're still obviously impactful, but I think the reaction is going to be a little bit less. Where we get into, I think, a more serious situation is where the retaliation starts, and maybe restrictions on certain goods, like Europe has, somewhat threatened.
We can save that for tomorrow, because I'm sure there'll be more talk of this tomorrow. Theresa, thanks as always for joining us.
My pleasure.
Theresa Shutt is Chief Investment Officer, at Harbourfront Wealth Management.